only invest in what you know. So don't take my word for it.
Yes.
Right? Don't take my word for it.
I didn't think I would ever do a fucking podcast. I didn't ever imagine doing that. It made me realize that my purpose is to help others reach the goals and reach their full capacity. And if I can impact somebody's life, that is bigger than money. That is bigger than anything else.
Welcome to Livestream. I'm your host, Dr. Alex Plains, with my co-host, Jeremy Applegate, where we teach you how to stream your life. Today, we have an amazing guest from eXp Realty, Alex Haigh. His team, amazing, conquers the whole Treasure Coast, all the way to Palm Beach, right?
Yeah, we go down to Palm Beach.
Awesome. So it's great because we've had other teams that have come in the past in real estate, but there's been so much of an evolution in regards to the interest rate. Is Powell going to lower? Is he going to continue to raise interest rate? What's inflation? Is it going to be tamed? How's the Florida market versus other markets across the country? Do you do commercial real estate? Do you do residential real estate? Should you buy multifamily? Should you buy single family homes? So
should he write this stuff down? I'm trying to figure this out.
He knows. These are all questions that everyone's wondering, right? So for an entrepreneur that's really wanting to start investing in real estate, what options do you recommend at an early stage with really minimal down payment in order to get their portfolio started?
I think you start with your primary residence. Right? So if you have minimal money down, if you're a vet, that's great.
Okay.
0% down. And FHA is 3.5% down, and then you can get up to, in some instances, 6% seller concessions. So a lot of people don't realize that there are quite a bit of fees that go in when you buy a car and you go on and buy anything. Like, there's a bunch of quote unquote fees. I won't use the BS word. But,
When the first time I bought my first home, I graduated dental school, right? I had massive amounts. I was like over $400,000 of debt. I was making six figures as a dentist. I got a contract, from Aspen Dental, making $150 plus commission. And then I went to try to buy my first house, and unfortunately, I couldn't get finance. So I was trying to figure out what is wrong with the system. Why can I not buy my first house? Because they were using the student loans against me. So my income versus my debt to ratio was just way too high, till then I figured out a way to put my student loans on a different plan called income-based repayment, lower my liability, and then I was able to buy my first home. But it literally took me 9 months to figure this out.
That's I always like to say I know enough about financing to be dangerous, right? So I always, same thing with, say, a home inspection. Somebody says, what do you think about the home, I say, let's get a home inspector in here and do a thorough job. So I would do the same thing with a mortgage broker. Say, whoever you were dealing with they didn't know the programs well enough, right? Like,
exactly.
Some dentists that maybe know a lot more than others, but you all are MD.
Of course.
Right? So not all are created equal, I guess.
Yeah, I had a crappy mortgage broker. I had to figure it all out, but finally I ended up buying a house in Melbourne, 3.5%, and I think I paid like $240 for it. And it's like you say, you focus first on your primary home, and then you start building a portfolio after that. A lot of my friends tell me, Alex, why did you invest in single family homes instead of buying like commercial real estate or multifamily? What is your opinion on that?
I think that you need to get educated first. I think that, the book I read, which really kind of helps you understand cash flow and so forth, is Rich Dad, Poor Dad.
Yes.
You should read that book.
Like Kiyosaki.
Yeah.
Definitely read that.
You got to read that book, right? And then you start to understand the quadrants. And, everybody wants to get over into other people's money, and, it's kind of what we're talking about here. But you got to get educated first. So then you understand what cash flow is. You can understand how to evaluate a property. Whether it's a single-family home, whether it's multifamily, whether it's commercial. You just need to understand the numbers first. So I wouldn't sit here and say, hey, you should go invest in single-family. Or you should go. It's like, what are you going to feel comfortable with? What do you need to get educated about? Then get with a professional, the mortgage broker that understands your debt to income and all the different kinds of programs that are available to you. Get with a good real estate agent that can help you make offers and understand values of what you're actually buying. And then, we get a lot of calls, right? And people are like, I want a deal. It's like, well, what does that mean to you? And not seriously, like, what does a deal mean to you? So if I was to show you a property that was, 95, if it was priced at 95% at what I think it was actually valued at, to me, there's 5% of equity built into it right there. Is that enough of a quote unquote deal for you? Does it need to be 10%?
Exactly.
Right. So I always just say it's an individual case, but back to your first question, you start with your home.
Okay.
Right. Because you're going to be able to, and I'm not an accountant, I'm not giving anybody legal or financial advice, but you can write off interest.
Depreciation.
Yeah, depreciation. There's all kinds of stuff you can do. You start with your primary.
What do you think of this new program? I know Grant Cardone was going crazy about the whole Sallie Mae, Fannie Mae. I think it's 5% for multifamily, where it used to be 20%.
Yeah. What do I think? You want to know what I think about the overall, where it's all coming from? It's creating more mechanisms
for rentals,
for debt. Yeah. I mean, there are more mechanisms. What I saw similar, and I'm not calling for 2008 here or anything, but when I saw, there's no ninja loans out here, no income, job, assets type stuff. That stuff doesn't exist. There is some stated stuff that's starting to come out, or no doc, not necessarily stated, but I guess my ultimate point is that there's a lot of new programs that are coming out that are creating situations where people are able to leverage money a lot more easily than they were. Exactly. So that's what I think.
It creates a problem, right?
It could
over time. How have you noticed, like, I read a lot about investment and like different, gold and Bitcoin and, credit scores going down and debt is getting really high. Yeah. Have you noticed, like, in your consumer profile that, like, the fecal score is going down and a lot of your
that's a very broad question there. I don't know where you want me to go with it. I'll talk about debt? Bitcoin and real estate all day if you want. Or do we talk about FICO scores? Which way do you want to go with it?
No, we can. Basically, what I want to see, because I've noticed, because I'm in the dental field, so we do a lot of patient financing.
Yep.
And we've realized that, the debt is getting really, really high. So it's getting a lot harder to get finance now.
Yeah.
Yeah, our patients get a lot of no's.
We're getting a lot more no's than we did in 2021 or 2020 or 2022. Like 2023, we had a huge decline in approvals.
Right. Well, what I would say is, and I'm kind of more of I'll go micro granular, but from a macro standpoint, consumer debt is at an all-time high.
Okay.
Credit card debt, all-time high. Student loans, all-time high. And now you have, on a government level, them talking about taking away the obligations to pay student loans. Like, I'm like, wait, where was this when I was $100,000 in debt? But anyways, I think to that point, it's just they're creating, to the Grant Cardone thing, to the FICO store stuff. It's tougher based on the previous lending standards, right? So what do they got to do to create more debt, which this whole thing is really built on?
Of course,
debt. So I think if you were to ask me what's going to start to happen as the pressure of inflation starts to continue to have its effect, which is people aren't spending as much on the things they want, and it's going to get to the point where they're not going to be able to start to pay these loans.
The loans.
And where that's going to happen, how that's going to happen, whether the government will come in and, like they did with Silicon Valley Bank, right?
Okay.
So they marked to market the bonds that were held on the books, and basically they could hold bonds. They were holding bonds that are at a low interest rate, but the Fed, with the help of the Treasury and the U.S. government, came in and said, we're actually going to mark those to market. So we're going to say that what you're actually holding is a higher interest rate, but it's not. And so it's like all these little
things that can happen.
All these little levers that are pulled, that it's like, is that right?
Really what we want to happen. Yeah. They pretty much went under. Did anyone acquire them, or?
They got absorbed, I think, by Fifth Third, Silicon Valley, and what was the other one I'm thinking of here? I'll think of it in a second. But yeah, they were absorbed. J.P. Morgan absorbed one of them, and I think Fifth Third absorbed the other one. But
Yeah. So my friend, I think you know Nick Messina, he basically asked me the other day, he's looking into buying a home, but he sees that the prices have gone up versus where they were a year ago, right, or a year and a half ago. Yeah. And then the interest rates have, 7.5%. But I told him, I'm like, I don't know if you realize, but when my family bought their first townhome here when they moved from Cuba, the interest rates were like 16.5%. Yeah. But obviously the prices were a lot lower. So what would you say to somebody that's in fear of buying their first home because they were used to the 2.5%, 3.5%, 4.5% during Trump and Obama during that period?
Educate yourself to get a point of relativity, point of perspective. To your point, a lot of people aren't old enough. Like I remember my dad talking about it. We talking about third generation and 17% interest rates, and so I felt that. People now, they don't remember that, right? So they think 6% is high. It's like, well, where's my 3% interest rate? It's like, that never happened. That only happened like once. Yeah. So you think that's real. That's not the standard. So back to Nick, or back to whomever is thinking about purchasing and like waiting for the interest rates to come down or waiting for prices to come down. We have these conversations. I do a role play every day, and we educate agents on how to have these conversations. There's no kind of tricking anybody. It's just, look, Joe Rosen did a great piece on if you bought a house in 2006, right? And you paid $350,000 for it. I don't know if you're aware of like what happened here, but we had 70% depreciation. So that house for $300,000 went down to $100,000. No lie. The lots went from $80,000 down to $5,000.
Yeah, when I moved here, you could get a lot for $10,000 or $15,000.
Yeah. And they went up to 80, 90, and then they went back down to 10.
Wow.
So I don't think that's going to happen again. I think that was a very unique event. Here nor there, even if you bought then and you held on and you took advantage of the tax write-off, you would have won over the long haul. I think that we talked about this a little earlier about the influencer, like people want their coffee right away, they want their this right away, DoorDash, everything happens so quickly, and we have this like immediacy
for immediate satisfaction.
Well, this is how I made $1 million in a day.
Correct.
In the real estate market. Yeah.
Correct. Yeah, and it creates this false reality.
Yep.
So back to that Nick Messina, like, look, if you can afford it, what we say to people is if you can afford it, you're going to pay through the nose for rent. This is the house I can get for rent, but that rent will buy me this house. But yeah, you own that house.
Exactly.
So if you got to be in a 2-bedroom, 1-bath, like, I don't know. I think that people have just been very, I'll use the word spoiled. Like, I grew up, I lived in a walk-in closet with my brother, and my mom lived in the living room.
Yes,
you know what I mean?
When I was in New York during my residency, literally my place was 250 square feet.
Yeah.
250 square feet, and I was paying $1,600 a month in student dormitory.
There you go.
So you got to do what you got to do. But he asked me, like, how much income should you make in order to understand if you can feasibly do it? Because he's like, how much do I need to make in order to buy like a $300,000 or $400,000?
You need to be, so this is the guidance, is like, get with a mortgage broker that is not going to sell you some crappy product. And so the numbers are in front of you. This is what I pay for food. This is what I pay for fuel. This is what, I have some reserve, and then here's what's left over. And do you want that to go towards an asset, or do you want that to go towards liabilities? Okay. Right. So that's the Kiyosaki is assets and liabilities, right? Yep. So do you want to be purchasing something that's going to accrue? Now, it may do this, but look, it's done this. Like anybody looks at a chart, right? It goes up. Yeah. So there's going to be dips, but you have to have this steadfastness. And I think it's a tougher thing, especially for younger folks that maybe don't have older folks that are, like I was raised by my grandfather. I'm kind of like, I'm a small generation, the Gen Z. What am I, Gen X?
Gen X. We're Gen Xers.
We're Gen Xers, right? Yeah. We're this like small coupled between the millennials and the boomers, right? And it's a smaller generation. So I had this like feel from the boomers,
yep,
and from my grandfather, who was the greatest generation that, like stormed the beaches in Normandy type generation. So anyways, I digress, but my point is, I think that people have just been a little misled about where their focus should be. I heard this previous gentleman in here talking, and I do. I think people just they're not focusing on the right stuff. in my opinion. If you're talking about real estate and if we're talking about building generational wealth, like I don't know, where you want to go with it, but.
Yeah, no, absolutely. There's a lot of great education because I get a lot of people asking me, Dr. Plains, I want to buy my first house. How do you do it? Or I want to invest in even my employees are like, I want to start investing in multifamilies or duplexes. How do I do it? How do I get a line of credit out of my house to be able to invest in duplexes? So
yeah.
I think we might know a guy.
We can help. Yeah, I mean, definitely the mortgage broker is the place to start. I mean, Kiyosaki's the place to start because when they're talking to you about debt to income and they're talking to you about this other, you want to have at least have a mild education
of what is going on.
What's going on? Yeah,
I've done a couple private equity deals like through Merrill Lynch where you put a certain amount, dollar cost average, for 10 years. You don't own the property, you don't own the headache, but it gives you high returns. What is your opinion on those type of private equity deals or real estate investment trust accounts that you can build?
REITs are a great way to go. So if you want your single family home and then you couldn't go out and leverage some money for a duplex, or you're like, I don't even want to be a landlord. Yes. I'm not hyper familiar with those products. I'm always, and you guys know who Jim Rogers is?
No.
So he was a commodities guy,
Okay.
and he was with Soros, and he built
gotcha.
the quantum fund and everything. But he just says, only invest in what you know. So don't take my word for it.
Yes.
Right? Don't take my word for it. I do think that investing in real estate, but which type and how, I think you just need to do some work so that you feel, it's like people say, well, should I buy Bitcoin? I'm like, what do you know about Bitcoin?
Well,
it's
everybody's
going up.
buying it. That's
everybody's buying it. It's like, but if you are buying it because I'm telling you to buy it, then you're going to sell it because someone else tells you to sell it.
Yep.
Amazing.
Yeah.
Do you believe that Bitcoin eventually is going to be a transactional tool towards buying homes and all that?
I think it's going to be the base layer of the monetary system of the world.
I believe it.
So it's not going to be something that people use to transact with, even though it has very limited friction with it and you can take it anywhere and all that kind of stuff. But I think it's going to be something that you're going to leverage. So it's going to go into the DeFi protocol stuff. So you're going to be decentralized finance. So I'm going to have my Bitcoin and then I'm going to be able to leverage my Bitcoin.
Yeah.
You know what I mean? So you're not going to actually sell it. It's not something you're ever going to sell.
Gotcha. And then you're going to use like DeFi coins?
Yeah, then you'll put it onto Sushi Swap or, any of these DAOs, the decentralized autonomous organizations. Like you're going to find some kind of DeFi protocol. And they're doing a lot of layer 2 stuff on Bitcoin now where it's going to be, you won't even have to go to a DeFi platform. Like it'll be right on chain.
Wow. Yeah, today I was reading an article by Kathy Woods. Now she's predicting Bitcoin 1.5 million.
Yeah, by 2030.
Yeah, I was reading that today.
Yeah.
And I believe it could happen. I mean, the next bull run is probably going to get us at 250. Well, which we are now, but
yeah, I mean the ETF is the all-time high just being hit last week before the halving is the first time. That's never happened. So there's just so, and I hate saying this, like it's different this time. I hate saying it. I'm really curious since I'm ready for because I've started buying in 2017.
Okay.
And we're talking about real estate here too. I'm talking about assets.
Yeah.
Like it could be buy a hard asset, buy gold, buy silver, buy real estate, buy land, buy hard
Diversity.
assets that can't be taxed. Meaning, you own Bitcoin, you can't be taxed at this point. We'll see. But we're getting taxed every day by inflation. A lot of people don't kind of see inflation that way, but compounded inflation is about 7% since the Fed brought us on in 2013. So 7% compounded. So if you're just holding cash, you're losing 7% a year in purchasing power.
insane.
Right? And so be like, oh, I'm gonna buy treasuries at 5%. It's like you're still losing
money.
You're still losing.
Yeah, I saw that we're advertising now Morgan Stanley 4.5 money savings accounts now. 4.5.
Right?
Yeah.
And people are like, oh, that's great.
Yeah,
it's like, you're still losing, pal. I mean, you're not like getting crushed by
It's less, but it's still a loss.
Yeah, it is. It is.
So that's great so you guys to listen. So it's 7% since 2013.
Compounded. Yeah, I mean, if you look at 2021, they printed 40. Well, in the last 2.5 years, 40% of the dollars ever created in the history of man have been created. So that's 40%. That's why Michael Saylor went all in. You know who Michael Saylor is?
Yeah, he's the one that predicted the last crash.
Well, that was Peter Schiff, probably. You're talking about Peter Schiff?
Well, the one that there was a movie created about it, when the real estate.
Oh, you're talking about Michael Burry.
Okay.
Yeah, okay. Michael Burry. He's the guy with the Asperger's in one eye.
Yeah.
Yeah, The Big Short.
Yes, The Big Short. Great movie. No,
Saylor is he's kind of like the next generation of Max Kaiser. Max Kaiser was the one that really pushed Bitcoin early. Like, he was like calling that he was a Bitcoin millionaire when Bitcoin was $1. I remember that day. But you couldn't buy it like you can buy it now. There wasn't any Coinbase or, Kraken or any of this stuff. You had to like figure it out. And I'm not a tech guy. I just like tech, but I don't know how to use it. But the point is, Michael Saylor, he's the longest running CEO of a company that was started by himself, by the individual. So he runs MicroStrategy, and they're a software company, and he's got an astrophysicist, and he's brilliant to listen to. You're a smart guy. You're like, listen to this guy, because he will just blow your mind. Anyways, he had a small software company, billion-something dollar company, and he was a billionaire already. But I listened to him the other day, and long story short, he basically saw what the Fed did when they came in after COVID and was like 1.3 trillion, like out of the gate. Like, if you look at 2008, do you remember what the bailout was in 2008?
No.
That they had to go to Congress and everything. It was a super big deal. It was $800 billion. To put it into...
To the banks.
Oh, wow.
Just to put it into context.
Yeah. They snapped their fingers. And
that was a really big deal.
Yeah.
$800 billion. And then COVID came, it was like 1.3, 1.7, then So it's compounding, but that was a really big deal. $800 billion was a big deal.
It was huge.
Yeah.
It was huge. I was still in I think in dental school when that happened.
Yeah.
So I want to change the shift a little bit. I would love for you to talk about, because one of the things that I saw overseeing your profile and your bio, which is amazing, by the way, what you've been able to build. How do you build teams, and how do you keep them inspired and motivated? Because that's one of our biggest challenges. We own several dental practices across Florida. So one of the hardest challenges I face is having a team that's aligned and working together and focused on that vision and the consistent culture.
Yeah, man, what a good question. And you hear it over and over and over, culture.
Yeah, for sure.
Everybody's got a different way of doing it. For me, what I've found out that works, because I've had a lot of different iterations of teams, meaning people just coming through, just constant turnover. And what I've learned through all of that is to really have an ethos that you stick by. And so our ethos is hungry, humble, and coachable.
I like that.
And so what I look for in people, right? I look for, if they come to me and they're talking about splits, they're going to leave for a split. If they come to me and they're like, I'm coming to you for leads, then you're not the right person. So that's a lot of it's like asking those questions in the beginning, like enrolling the right people. Have you read Rocket Fuel?
No.
It's a great book. It's basically putting the right people in the right seats is one of the premises, and you could have the right person in the wrong seat.
Yep.
So the right person is hungry, humble, and coachable, but they could be in a salesperson seat where they should be in an admin seat.
Gotcha.
Right? So one of the things that we look for is that in the beginning. And then another thing that I've learned is culture can't be just a Monday meeting. Mm-hmm. And this is what we're all about. Here's the minutes. This is now where we're going. Here's casting the vision. Let's go, everybody. And then you go and they don't see you and you're not part of that. So we do so what I've found is I really need to be with the people constantly. And not constantly, but I do a morning role play every day. We've been doing it for 3 years straight. And
it's like a morning huddle.
Well, we meet for an hour and we actually role play. So we do LP Mama, listing price, motivation, agent, mortgage appointment. Just I don't want to teach scripting, right?
Yeah.
I want to just teach you how to have a good real estate conversation, and you learn little things and things to say, and how your cadence, how your tone, what your timing looks like, and all that. And that what I found is the people that come to that, like, so what I do now is I say, okay, I want to be on your team. Okay, well, why don't you come role play for a couple weeks?
And see if you want to be a part of it.
Yeah, like if you're avoiding it, you're not the right person. So all the leads in the world, all the fancy gadgets and, shiny
Metrics,
objects.
tools.
Well, I think it goes back to what we've already talked about is, they want everything to be handed to them. And they don't want to put in the work. They don't want to put in the grind. They don't want to do any of that stuff. They just want, like in your situation, you gave a great example. I just want leads. I don't really care about anything else other than leads. And we run into that too in our industry.
Yeah,
I don't want to
just
sell.
focus
I don't
on
wanna
one
do this.
certain goal. Yeah. So I've learned about like your interview process to see if you want an agent on your team. What does that look like? How many, like, do you just start asking them a lot of questions?
One of the questions I ask is, tell me about the most difficult thing you've
accomplished or
most
done?
of the thing you've overcome in your life
Yes.
and how you did it. And you learn a lot about somebody, about their grit, about their resilience. I had somebody once say to me, and this is somebody who was already on the team, and I asked this question kind of after, and he said, well, I was at a job once, and there was this person in the cubicle behind me, and they talked really loud. And I was like waiting. Like,
Yeah, where's the
rest part?
Where's the solution?
yeah, where's the tough part?
Oh, yeah, the tough
where's
part.
the
Yeah,
tough
the tough
part?
part. Yeah, yeah.
Like,
Yeah, that's true.
I'm like, man, I got stories about
For days. And what
Yeah.
is your most successful agent? What qualities? Like
hungry, humble, and coachable.
Yeah.
Yeah, like just
Period.
so here's a great example. Her name's Jessica. I mean, I got some great agents on the team, but just as an example of one of the kind of person that we're looking for, right? Is we were at an event, and the facilitator says, I know nobody likes role play, and Jessica goes, I love role play. You know what I mean? Like, that's the person you want. Doesn't look at that like, oh, I got to go to role play and it's uncomfortable. And it's like, but that's what's going to make you better. It's what's going to make you help people. It's going to, yeah.
How do you keep your agents motivated when there's like, up and down, and, you got an agent that just had an amazing month and then the next month a decline. We have it in our business. We have great months and bad months. And how do you keep the team motivated during those times?
I think, this last year was very challenging.
Yes, it was for us too.
It was very challenging, and I've been through, but here's the deal. I've been through a lot worse. Like 2008, when you were in dental school, like there was no lending.
There was no way of
it's
getting
like,
a loan.
there's high interest rates. It's like, there's no interest rate because you can't even get a product, And then it's like nobody has cash because everybody got wiped out.
So there was no way.
You know what I mean? They also know that, like, look, y'all, I made it through that. I was doing short sales when the attorneys didn't even know, the banks didn't even know. Like, I was figuring it out. Like, you've got to learn to figure things out and grind.
Adapt in the situation.
So, yeah, but I don't do this. I'm just like, hey, like, I did it. But back to your question, I think you just have to stay with the same message. Like, there isn't any special secret sauce. Honestly, I mean, the secret sauce is it's like a soup, right? There's a lot of different ingredients. And I think that, we do morning role play. Every Wednesday, we're either doing phone jam 10 to 12, and then like this week is call night. So we call from 6 to 8, and we have dinner together. So that's part of the culture, is like, hey, we all meet, say we're going to do this. We all do it. We go away. So you get at least a feeling of, hey, this is what 2 hours of prospecting will really bring, right? And then we have dinner. We don't talk. We'll maybe talk about real estate, or we'll talk about
You do that every week.
We do that every week.
That's
awesome.
And then on
amazing.
Thursdays, I sit, and I don't need to do this anymore. I do it because
You want to.
it's a responsibility, and I like being with them. Where I'll sit between 9 and 11:30, and it is just, we have something called a pond, which is like we got 50,000 leads in there, literally. And I will say, load the dialer with the pond, and these are people that have not been talked to. And I'm like, just go. And so I'll show them that I will just do it.
Of course.
And I'll be talking to them, and and then I'll zone in,
Focus on it.
I'll focus on it. And then I hand out leads. So here's part of the motivation. When I'm talking to somebody and I actually find one out of every 15 that wants to have a conversation, or further conversation, that person's right there that came to the meeting. I say, you know, Jessica or Terry or whoever is going to call you. I hand it over to them. Boom, they go. So they get to see that, like, they're right here. These opportunities are here. And we bring live leads in all the time.
Of course,
and stuff,
they're right in front of them.
Yeah.
So who holds you accountable, Alex?
Me.
Yourself.
Yeah. I mean, I have accountability kind of partners and coaches, but one of the things, Alex, I'm working on, Alex, is to be easier on myself.
Yeah, same here.
You know, to be more nurturing to myself, because, like,
self-love.
Yeah, man. I mean, I think of self-love as, like, I think discipline is a form of love, because discipline ultimately will bring you freedom. And if everybody says they want freedom, and I say there's two different kinds of freedom. There's freedom from and there's freedom to. So people go, what does that mean? So, well, Tony Robbins is the freedom to. Freedom to do what you want, when you want, how you want, with who you want, right? Freedom from is this, that you want to go do something, or you said you're going to do something, and then that little character or whoever, that
little voice, the gremlin,
comes in,
the gremlin.
No, you don't need to do that.
That's a bad idea. That's a bad idea.
That wasn't a good, you didn't think that one through. And it's like, no, yeah, I did, because I want to lose weight and I need to not eat. Like, I did think that through. No, Dairy Queen's looking good.
Like, I love Tony Robbins, and I love how you state that. And I always tell Jeremy that I want to live a life with no barriers, or a life with no walls around me, right? You're a little older than me. What do you recommend for somebody like myself to try to accomplish that moving forward in the next decade or two, in order to be able to, you know, make passive income, but live a life of quality, and not being stuck at a, you know, in an office or in a building space or whatever the case might be?
I think you first have to realize that there's a concept called the hedonic treadmill, and I think a lot of people are trapped on it, and I think a lot of people want to get on it, and they think that that's actually going to give them freedom. What the hedonic treadmill is, like hedonism, right? Like, it's just just gorging on life, right? It's a treadmill, though. So I know some very wealthy people that, and I'm sure you do too, that are freaking miserable.
Yep.
Right? So they always thought that thing was going to make them okay. Like, all we really want is to be okay. Let's be honest.
Exactly.
People just want to be, I want us to be like, let's be good, man.
That's problems. That's
yeah,
problems.
like, well, it's all relative, right? Like, because without problems,
You can't grow.
you can't grow, right? Yeah, I mean, you got to have friction. The trick is to understand, like, who the witness is of the friction. And once you get who, and I'm working on this, by the way, and I'm not any, like, boot on a hill here, but the more I realize that it all is also trite, you know, it is also fleeting, that the problems don't really seem as big, right? So there's challenges and opportunities to figure out, and there's an old saying, like, you're paid in equal proportion to the value delivered to the marketplace. So if you can solve problems, like, look at Elon. He should be the wealthiest person in the world. Like,
Yeah,
he
he
figured it
solves
out.
Constant working.
He figured some shit out.
Yeah.
So you should be paid well. So there's a lot to be said for solving problems. Yet it's like, you can't just solve problems into perpetuity and eventually you're going to be happy. I think that kind of Wayne Dyer, like, I don't know. I'm not kind of going off on a tangent here.
No, that's beautiful.
we like
I love Wayne Dyer.
Yeah, I mean, that's the first trick. So I would say work on that, and that is this. And there's a lot of different ways to like tame this, because it's kind of like
The mind, yeah.
the mind is so, like, wily.
Yes. It'll take over you.
It will take over, and it runs the show. It's like, who's running the show?
That database is full of information.
Yeah,
Good and bad.
Good at, yeah. I mean, it's like sifting through it all to, like, make sense of it.
And a lot of the decisions that I personally make sometimes is due to, like, like, we're talking about something completely different now, but I listen a lot to Tony Robbins, Joe Dispenza's, and he's always talking about your conscious and subconscious mind, right? Yeah. And that subconscious mind will really mess you up sometimes in your decision making and rational thoughts.
Yeah.
So I'm going to wrap it up with this, because I think this is something very important for you guys to hear from Alex. If you saw yourself, your 20 or 30-year-old version, is there any special message that you would tell that guy at this point of your life?
I wouldn't change anything. I've made a lot of stupid mistakes.
I think we all.
Yeah. I would offer this. You know, I quit drinking about 4 years ago, and I couldn't imagine that at the time. And I don't go to AA. Yeah. I didn't get a DUI to beat my girlfriend or wife or anything. But it just didn't serve me. So I would say the kind of looking at your life going like, is this really serving me? Those hangovers that you've got, like, are they really worth it? Because I've had a ton of them in my life. And I don't know if they're really worth it, you know? And it's just a habit. So I'm not getting on a hill preaching here or anything. Like, that's a good place to start.
Yeah.
Start doing some ice baths. Start doing some breath work. Start doing working out to build mental strength, like working out in that. And that's going to serve you later in life. The stronger that you become in your head and your body.
Do you read any David Goggins?
Yeah, I'm a Goggins fan. Yeah. I mean, he's taken it to a little bit of an extreme, you know? Yeah. Like, I dig his message. I wonder if he's happy.
Yep.
Yeah, he seems pretty miserable all the time.
Yeah, he's pretty angry.
You guys doing that?
Stay hard. Yeah. Which is a great message, by the way, where we are right now, back to what we're talking about. So that's a really good message. Yet I don't know if that one singular path is
the right one,
you know, because I just don't know if I'd love to talk to David, and he'd probably be like, what the fuck do you care? What do you care if I'm happy?
Yeah, everyone, you know, I listen to Ed Milet as well, and I love Andy Frisella because he's just so freaking upfront. And they all talk about there is no balance, you know. And when I was growing up, everyone was like, the goal to become a dentist and open up your own business was to find that balance. And now I'm starting to realize that balance might never exist.
Yeah, I think that's so perceptive that you're getting it. Like, I think that there's a little bit of bill of goods there, and these people are so influential, and they have done it, and they've achieved this, yet I don't think they all really have balance. Ed's a different story. I think Ed might have kind of figured it out a little bit because he's hanging more with Dispenza, right, and kind of understanding.
Spiritual.
Yeah, that is such an important part to it. Whereas you got the other guys like Becker or Alex Hormozi or Goggins.
Andy Elliott.
Yeah, and even Frisella. Like, I love Frisella, but it's just like, dude, it's so hard. Like, the message is so hard constantly. And I think that he serves his purpose because there's people that need to hear that. Yeah. You know? But
like, wake up, get to it.
Yeah. Yeah. But, like, to just do that, I think that's a little bit of the treadmill that you're not going to find the piece that you're looking for on. You know?
Exactly.
Yeah, I think that people need to start somewhere. So, you know, you start with Goggins and you start with Andy, and they pretty much smack them around a little bit, and then they evolve into a person that can understand what Robbins is doing.
Exactly. They make you realize that your problems are small and they're not big problems. But we're going to wrap it up. Thank you so much for listening to this episode. It was a great episode. We talked about investing. We talked about personal growth, leadership growth, team building. So thank you so much, Alex. Look forward to you guys checking out this episode. Thank you.
Thank you.
If you like this episode, check out more of our previous episodes in Livestream with Dr. Alex Plains. Subscribe below.